LIC has launched a brand new term insurance plan called LIC Bima Kavach Plan 887, and this is just a plain vanilla term plan by LIC, and honestly that's not a bad thing, but it does deserve a clear review so you know exactly what you're getting into. Hello folks, I'm Shashank, you're watching Ditto Insurance. Today let's break down what LIC Bima Kavach actually offers, what it does well, where it falls short, and who this plan genuinely makes sense for. First, for some quick context, LIC remains India's largest life insurer by a massive margin. You'll see their strong metrics on your screen now. Now, let's get into the plan itself. LIC Bima Kavach is a term insurance plan with entry age from 18 to 65 years. Policy term can run all the way up to age 100, which is unusually long even by LIC standards. Premium payment options are flexible, single pay, limited pay for 5, 10, 15 years, and regular pay. Payment frequency is limited to yearly or half yearly only. Now, one important thing to note up front is the minimum sum assured here is 2 crore rupees. There is no maximum cap, but underwriting applies. This already tells you who LIC is targeting here: higher income buyers. Based on the income multiplier shown in the plan document, minimum income effectively works out to come around 8 lakhs per annum or more depending on the age. In terms of cover structure, LIC gives you 2 choices here. Option 1 is a level sum assured where the cover remains flat throughout the policy term. Option 2 is increasing sum assured. Here the cover stays flat for the first 5 years, and from year 6 to year 15 it increases by 10% of the original sum assured every year, reaching a maximum of 2x the base cover. From year 16 onwards, it stays at that doubled amount until the end of the policy term. This structure is quite identical to LIC's other online term plans and is simple to understand. And by the way, we broke down their other plans. I will link in the description for you to see. Death benefit payout is flexible here. The default is a lump sum, but you can choose to receive the payout partly in installments over 5, 10 or 15 years, with frequencies ranging from monthly to yearly. This choice must be made by the life assured while buying the policy. The nominee cannot change it later. Minimum installment thresholds apply, which are clearly defined in the policy wording. LIC has also added a life stage benefit, but with limitations. This is available only if you choose level sum assured and regular pay at inception, and only if your entry age is 40 or below. You must opt for this feature right at the start. The allowed increases are straightforward. On marriage, you can increase cover by 50% capped at 2 CR. On the first child, another 25% capped at 1 CR, and the same for the second child. Each request must be made within 6 months of the life event, and underwriting does apply. On the rider front, there is only one rider available, LIC's accidental benefit rider. If death happens due to an accident, the rider sum assured is paid over and above the base cover. The total accident benefit across the LIC policies is capped at 1 CR, and the rider premium cannot exceed 30% of the base premium. There are no critical illness riders, no waiver of premium, no disability riders. Now, let's talk about most important part, which is pricing. You must be seeing the premiums on your screen right away. Look, LIC Bima Kavach is expensive. There is no sugarcoating to this. For a 2 CR cover till age 70 for a non-smoker male, LIC is consistently the costliest option across ages 25 to 40. In fact, let me tell you that LIC is not just costlier than the cheapest private insurer, it is significantly more expensive even compared to HDFC Life, which itself is usually on the higher side within private insurers. So what's missing in this plan? For a plan launched in 2025, LIC Bima Kavach does not include several features that are now fairly standard in private term plans. There is no inbuilt terminal illness payout, there is no instant payout on claim intimation, there is no auto cover continuance in case of premium disruption, there is no wellness or health management benefits, which is optional. Rider options are extremely limited. In short, this is a basic protection only product, even though it's positioned at a premium price. So who should really consider LIC Bima Kavach? This plan makes sense for someone who values LIC's institutional trust above everything else, wants a simple structure, needs a very long policy term, and is okay paying a noticeably higher premium for peace of mind. Now, if you are someone who wants maximum features, flexibility, riders, value for money, private insurers will almost always give you more at a lower cost. Now, before you decide, it's worth comparing LIC Bima Kavach side by side with other options available today. And you don't have to do that alone, because you can do that if you book a free call with our advisors at Ditto. There will be no spam and no pressure to buy, just a clean comparison based on your age, income, and family structure. And if LIC's brand trust is important to you, we'll tell you honestly whether Bima Kavach fits your needs or whether another LIC plan or even a private plan would work better. That's the real goal, not pushing a plan. Helping you pick the right one. The link is in the description. Alright folks, I'll see you in the next one. Until then, happy insurance hunting.